the energy transition and all that shareholder activism.
We're ready. Hi again, everyone. I'm Greg Newman, CEO of Onyx Capital Group, and I'm joined with Audrey and Vincent today for another episode of World of Oil Derivatives. Thanks for making it in, Vincent. It's touch and go there.
Bit of a last minute thing, but good to be here.
Okay, cool. Off to China tomorrow, right?
Thursday,
right? Okay. So we haven't got SM, but we'll do the same old layout, right? Get a bit of update on the market, and then maybe talk about slightly other topics, but we'll get there when we get there. So just start off with Audrey, just a quick summary on what's been happening in the last week since we last talked.
I guess, oil prices fell below the $70 per barrel level. They've kind of rebounded up again this week. They're at 76.39 right now. Looking, I guess, at the CFTC report, I think that just shows what we were kind of expecting, what we were chatting about last week. All the bulls and Brent futures, again, just liquidating positions. It was like over 42 million barrels last week. More short positions being open in Brent futures. I think, Vincent, you can probably tell me a little bit more because you did this yesterday. Same thing being seen in TI, but this is just kind of what we're expecting to see now at this point. With the prices going down and down and down. Just this tweet, I just thought this was kind of interesting. Just somebody saying how oil market analysts believe that last week's dramatic sell-off was actually just a reflection of fear rather than something fundamental, putting the focus squarely on the upcoming demand estimates from the likes of OPEC for clues about the economy. Because I think some of those are going to come out this week from OPEC, what their demand is going to be. I think it's Thursday it's due. So it's going to be interesting to see kind of how the market reacts to that. I think it might be a little bit lackluster for the kind of next day or two. And then I guess we'll see what the kind of demand, what they say about demand on Thursday. And, I guess with the market now really, really short, if any kind of longs come in, that really could push prices back up again. I guess that's what people are hoping for.
Searching for the next narrative.
Yeah,
right?
exactly.
We went dramatically down to low 70s and Brent. It popped up again now. It seems a bit more stable. And it's about this narrative, isn't it, Vincent? You love talking about this. So the narrative at the moment that we've been tracking was kind of the OPEC cut and the nature of positions around that. But now that's kind of given way. It's this same consensus that we heard since the beginning of the year. It's the second half demand story, like Audrey said. So this IEA, it's IEA, right?
Yes.
EIA, sorry. Their monthly market report is out, and we think that's just another chance for the narrative to be reinforced, which is by second half we should get a lot of demand because everyone seems to be hoping, or at least building their story on that basis, right?
Yeah, I think this narrative has been regurgitated so many times since the start of the year. And seems like it is seems like a seesaw between bulls and bears because you had this OPEC cut last month, and then last week, 2 weeks ago, a couple of bearish headlines in succession. It was extremely bearish for the prices. People exited their long positions. More short investors came in. That's what we saw on the CFTC report. You had, deteriorating global economic outlook. US consumer confidence wasn't looking so great. So was, I believe, China's manufacturing activity. The PMI indicators showed a surprise contraction, first time in 4 months, leading to some concerns about how's China's economic recovery really going? Plus the return of the regional banking crisis in the USA. You had First Republic Bank and then PacWest. All of these banks looking for other banks looking for a sale. So it was quite a bearish week for oil. But then towards Friday, yesterday, Monday, prices did see a correction upwards. Perhaps that was there was some sentiment that prices may have oversold a little bit, or prices came off to the low 70s, which could have been an attractive level for oil bulls to come in to almost like reset the narrative. Okay, we had the sell-off, but then there's good economic data from China coming in, Golden Week holiday, people were traveling around. Okay, interest rate hikes may be coming to an end soon. Okay, very optimistic for summertime for the second half of the year. So it seems like it's a seesaw battle opposing bullish and bearish narratives.
Yeah, and I think when we've talked to traders, you're seeing this buying the dip mentality in some people. Whenever you see an aggressive sell-off, it's usually indicative of stopping out. I mean, it's not really passive selling. So a great time to buy or great time to sell is once the market's kind of stopped out, because it just tends to have an overreaction. You tend to get a pop-up like we have. But the new longer-term trend, it's just not so sure. And I guess we know the market, for whatever reason, well, we know why. The market loves to be long because it benefits the most amount of people, right? Producers benefit, refiners, I don't know if they benefit really, but they care about the crack. But, oil traders, notional values, all this kind of stuff, this all plays quite well into more money being in the oil market. So I think there's a general tendency and bias for people to want the market to be higher. So buying the dip mentality coming in, that could have been the reason to support it. One thing I was saying on LinkedIn last week was the refinery margins actually outpacing Brent to the downside, right? So refinery margins getting lower, so the refinery margins were getting lower as Brent was moving lower, which means that any hope people had that the lower prices would spur end user buying, it doesn't seem to have materialized. So that buying on the dip is speculative, entirely speculative. It's not, at least it doesn't seem yet that it's end user buying driven. That could change as things stabilize. But the market needs a new narrative, right? I mean, is there anything else? The demand story,
it's so overdone. Yeah, I mean, you've got the EIA's monthly reports tomorrow. Oh, no, today, Tuesday, and then OPEC's Thursday. I think people will probably be clinging to that this week, and then same with stats, like depending on how aggressive crude draws are in the US.
Yeah, it needs a new focus, doesn't it? It's all a bit dry now.
It's just the same thing. I mean, even when we were looking for news today, it's all the same stories again and again. Just people trying to put their spin on the same things. I mean, we talked about that, like what will send oil prices to $200 a couple of weeks ago. It's all those same narratives again.
And it doesn't seem like media articles and traders want to talk about building up a narrative for the downside, right? It doesn't seem to be that. Yeah. And again, it just comes back to the bias, I'd say, because there's plenty of bearish kind of headlines or narrative to get yourself stuck into. I think the refinery margins is a huge one. It's just, refiners aren't having profitability anywhere near the same levels as last year. And they've all ramped up and expecting this good times to continue. And we've got way more refinery production coming back online. That was shouted about a month or so ago, 2 to 3 million barrels, maybe even more a day added in refinery capacity. So refiners around the world are competing for no money. So it doesn't spell well for crude demand at the very least on the immediate basis. So all the hopes are pinned on the second half, which are just, gas oil inventories building. Like it's all, we could talk about it, but I think we've also mentioned it quite a few times on the podcast. So maybe this is just one of those weeks where we kind of wait and see what happens, and therefore we should expect volatility to be quite low, right?
Yeah, I think as well next week, if we're talking about the FTC report, I doubt there's going to be much changes. Yeah, I think it won't be till next week that we'll see the change because the data's so lagged. I think what will happen after these two reports, if nothing happens, I think that's a really good indication that nobody wants to be long anymore. But I don't think that will happen. I think the prices probably will move up a bit again. I mean, they're up at 76 again today after being below 70. So I think how the market reacts following those two things will be quite interesting.
It was an interesting one saying I think Brent was supported at the 71 level, but WTI, of course, the prompt during the peak of the sell-off, it came off $1 or $2 below 70, around 68, 69. But there was a really interesting event that happened last week in WTI. You two might have seen it during the opening of the Asian market. I think that would have been 11 p.m. UK time. It was actually not immediately after opening, but 3 minutes after the market opened, boom, WTI crashed down from $68 to $63, all within that was instant. If you look at the candlestick, it would have been a very long line to the downside. So 69, 68, 68, 69, but then on one of the 68 candlesticks, it extended down to 63. So apparently during that time, 3,000 lots changed hands. it must have been a stop out, or some people say a fat finger. But that's also very interesting, because if prices technically go below 65, then some investors would have been automatically stopped out. But then prices immediately came back up afterwards again. So that's quite mysterious. Only the exchange really knows what happens with those trades.
It's the problem when you're trading. It drives you nuts because there's not really much transparency on like the kind of order of fills. So when you're clicking on a screen, you're kind of looking at it, you can see the volume there, and you don't, let's say it's like 69.90 at 69.91 on the Brent futures ladder. You never click 91 when you're clicking to buy, right? You usually click a few above to just get the volume done, because you can kind of see what's there and you just want to guarantee it. So that there's the volume on the ladder you can see, and there's volume behind that, like iceberg orders, right? But the problem is that, particularly with stops, when it approaches your stop level, let's say you got a sell stop in, then the sell stop is just, as soon as it's triggered, like you say, Vincent, it reaches that level. So it just executes, a limit order or a market order, and just kind of hits the market. Now, people just don't know, but how is it you always get the worst fill if you're the sell stop side? So you'll see, let's say I stop out 69.90, you will get a fill like 69.86, and the market, you can see, never actually traded there. It traded like 2 cents higher. That was your fill, but there was plenty of volume. And I guess it's just all coming down to the algorithms, right? The algorithms are working towards, if there's a lot of selling orders coming in that's more than the buyers, then obviously they kind of front run it, right? They take all the buy orders and then show a bid. I know it's kind of complicated, but the point is that because they're faster into the exchange, quicker, automated, and a bit more controversially, we don't know if they're seeing the order book. So for example, if I put a bid in, I can show the market my bid. But if I put in a stop loss, the whole point is I'm not showing that to market. Okay. I'm saying to the exchange as part of the order, if it reaches there, then you can put the order in. Can algorithms see that? Can high frequency trading companies see that?
Yeah.
I think they can. And I've had discussions with people who said they definitely can.
Okay.
But I don't think anyone's going to come out and openly admit that. But if you think about it, that's, in this scenario you're talking about, Vincent, that's why you should be really careful about stops overnight. Because if there's really thin volume, and let's just say for argument's sake, there is a way to access the order book for stop losses, then algorithms can go like searching for that stop loss, right? And maybe this is just something they do generally. If it's in a really thin market, you kind of, what's the point of trading when it's really thin and nothing's going on? There's no flow to get ahead of. Well, then why don't you just kind of go searching for it? And then if you get extremes, highs or lows, you trigger a stop, and there's suddenly a wave of flow that you can get ahead of. Do you get what I'm saying?
Sort of, yeah.
So yeah, it's a little, I'd have to go into a lot of detail, but there's been scenarios like even in your market, like people kind of, I guess, rumors, why was there so much buying last night? So, well, yeah, people are bullish, but they also know that overnight there's probably going to be stops in. So if they buy a hell of a lot of Brent ahead of maybe an announcement or what's perceived to be a bullish environment, then they want the stops to get triggered, because the great thing about stops is it's so aggressive in its price action. It just sweeps all the volume and it can create great momentum. So again, going back to last week, we reached this level, like, I don't know, 78, and then it was just like, boom, like all this volume was just going in. And that is a stop, because if you were just trying to enter a position, why would you attack the market so aggressively like that, right? You'd be passive about it. Like after the OPEC headline, like we saw the open after the OPEC headline recently, there was a lot of selling volume, but it was clearly profit taking because it was very passive, right? It was very like, I don't really care too much. I'm just trying to get the liquidity, sell a bit there, sell a bit there, sell a bit there, and continue it on. Whereas when you're stopping out, you just the whole point is you're getting out. Yeah. So just get me the price, I'm getting out. It's a fire sale. So it looks very different in price action. So that's why I guess it's good to counter it. And I think this is probably a wider discussion about the kind of nuances on this. But I would just like, the main point for me is the lack of transparency on who's doing what. And I guess if you are a trader and you have big size, having an exchange stop overnight is a terrible idea. I think that's just the conclusion. You get this is not the first time this has happened. This is relatively regular, I'd argue, in a trading year.
It's interesting. Last year wasn't there there was an event in the in the LME with nickel.
Yeah.
In that time, prices actually went up, spiked by a lot, and then came down. So it was sort of like a reverse thing, I suppose. A lot of short covering flows.
That happened with Brent as well. Like that was like a big part of the rally up to 137 last year, right? The peak. That was instantaneous, and it was in the morning. Right. Again, thin volumes, these things can happen. And people blame algorithms like for the reversals and the volatility, but at the end of the day, they're just getting ahead of big orders.
Yeah.
So they
need people to come in and
they need the stimulus. Yeah. But yeah, I think I mean, I learned from my mistakes, like having stops overnight, just it's a bad idea. It means you kind of have to be awake and watch it yourself. Yeah. But like you try stopping out at 3 a.m. and Brent, I might technically be open, but it's just a bad idea. Unfortunately, it's just part of the risk management process. Yeah. Cool. So anything else on like where we go here? But I do think it comes back to that point, like the market conditions, and we are a bit less volatile right now. It seems to have calmed down. We did surge back from the 70s, low 70s, but it feels a little more stable today.
Yeah, it's not chopping around as much today.
The point is market conditions are a reflection of behavior, right? And reflection of conviction or lack of conviction, uncertainty. Right. And I think uncertainty can be, I want to get out because I don't know what's going on, or I need to just hedge because I'm not sure what's going on. That doesn't seem to be happening right now. It seems just like a wait and see type market, and we'll see that in the lowering volatility this week. So what is the next thing to create volatility? I don't know. We have to wait and see.
I think it's got to be the demand story this week, and if that doesn't materialize, then it's going to be a bit bored, isn't it? When
you say materialize, it's just like a report
again. Yeah, but unless they go super bullish with it,
but it's just I would argue that that's already been the market's narrative who want to be long. Yeah. So it's just going to be more of the same. So the people that would have reacted that already have. So what's going to create new bullish momentum using that story, right?
Yeah. Yeah, you're right.
And I think it's okay to say there's nothing interesting.
Nothing,
that's fine. But then in a market like that, then the next new event is going to be impactful because people are waiting for it, and they'll probably cotton on to whatever the next new story is.
Yeah.
Yeah. But as I say, people are very unwilling to be short. I think the kind of fear of OPEC cuts is kind of generically what it is. But the more and more that gives way, I don't know. I see so much more risk towards the downside, but I think it's just getting a circular argument at this point.
Yeah.
You know, if it's not that interesting stuff to talk about in markets, like we said, we talk a bit differently about some stuff today. Go on, Audrey, you want to?
Yeah. So I guess I was back in Ireland this weekend with my family, just kind of chatting, about work, etc. So it's kind of a year since I joined Onyx. So since I made the switch from, my other career was obviously in science, moved over to this world. They were kind of asking me, how I'm getting on, etc. And I did kind of have like a little bit of a reflection on, how Onyx has kind of compared to what my expectations were for the company a little bit.
And moving from science.
Yeah, and the move over. I mean, I think obviously from the outside, I didn't know much about kind of the world of oil derivatives and swaps or anything like that. And
trading in general?
And trading in general. I mean, my idea of trading was coming from, movies like The Wolf of Wall Street and like any like big Netflix documentaries and all these big scandals. And I guess my thinking was, moving over, this is going to be a really cutthroat business. And I'm young, I was prepared for that. And I think I remember in my interview, Greg, do you remember saying this to me, that you said, we're really all hardworking and we're really cutthroat. And I thought, that meant I'm going to be getting screamed at every day.
Cutthroat, literally
cutthroat, that, I'm going to make one mistake and I'm going to be out the door again. And I was like, I was ready for a big change. So I was kind of prepared for that.
Okay. But so you read that as I
was gonna get screamed at.
Yeah, getting screamed at, the traditional like kind of heavy duty alpha. Yeah. I mean, that's definitely it's definitely how it was on some trading floors in investment banks for sure. That's like not even in question. There's a bit of that at my last place at the beginning. It certainly evolved. But yeah, it's just whether or not, I find it fascinating because people would say that's just the way trading floors are and that's just the way this industry is. It's such an excuse. It doesn't have to be that way at all. I was the same as you. I actually enjoyed it because I came from boarding school. I came from like a kind of a bit more of a boisterous like rugby stuff and all that. Yeah. So like I didn't mind the immediate culture, but I wouldn't really say it was like didn't help us be better. Maybe the urgency and like the kind of directness helps, but you can achieve that without getting all shouty. But I see exactly what you're saying, because you've seen the movies, you've seen whatever.
Yeah.
So you're like, you translate that to, okay, this is what I'm going into. But it's just, I don't know if, I can't really speak for other companies, but it just feels like a completely different time. At least on the trading floor, people scream and shout, but it's very much in frustration at brokers or even at themselves, right? Or at junior traders for getting something wrong or not putting something in. And it's all a bit of a, I would say it's more towards like panic than it is about like
actually giving out
and bullying, you know. It's like, oh my God, and they don't say those words, oh my God. It's their way of dealing with the pressure, right? Like, get it in right now. Oh, this is happening. And it's all very high pressured, but it's like, I imagine it's like the fighter pilot analogy, right? You want to be communicating and clear and cut. But the thing is about trading, especially in the way we do it with training programs, is that your co-pilot isn't really trained. Well, they aren't trained. You're training them.
Yeah.
So it's like you can't. You want to rely on them, and you get to the point where you can rely on them. But there's a big period where you're like, I can't actually rely on you, but I need you to do this work. And it's like almost like the only way is to get like really intense with it, and they tend to learn very quickly on that kind of path. But having said all that, it's not what it was. I don't know. There's things like, it's almost like when we were talking about the Just Up Oil stuff a few weeks ago. It's just the political pressure on companies has definitely had filtered through into trading companies, I would argue. I mean, I just don't. If there was a trading floor right now, I think it's more likely it'd be like broking floors or insurance floors. I'd say those are probably a little bit more old school from what I hear. I don't know. But certainly like a younger team, younger trading floor, I just don't think collectively the people are that way as inclined anymore.
I don't think our generation will put up with it as much anyway. I think, well, I know my sister's a couple of years younger than me, and she just, you know, got screamed at. Actually, just recently, I hope she doesn't mind me telling the story on the podcast, but she got screamed at in her job recently. And she was just like, do you know what? I'm only in my early 20s. Forget this, and just jumped ship to another company. And then they ended up crawling back and actually trying to offer her a lot more money to stay. But she was like, why would I stay?
Because they were being abusive? Or?
Yeah, she had like just kind of a senior person who shouldn't have even been in charge of her in the first place.
Well, that's what I was going to say. I don't know if it was so much, because you basically saying you were prepared to be shouted at.
Yeah.
But if you were being treated unreasonably, that's not the same as being shouted at, right?
That's true. Yeah.
They could have been quietly unreasonable and it still would have been bad, right?
Yeah, I don't know. I mean, if I was being shouted at quite regularly, I mean, I was prepared for it for a while, but I think if it was going to be unnecessary as well at the same time, I mean, if I was messing up all the time, then I probably shouldn't be in the job then, really.
No, I'm with you. And I guess the trading floor intensity, it's like, as I say, going back to that fighter pilot analogy, you kind of leave things on the floor, and then like the guy who shouts the most on the trading floor, he is like a sweetheart in the pub, and it's just the way it is. Like, he's just in the moment. That's just the way it is. It's definitely not personal.
Yeah. I mean, we speak to the traders every week for one of our reports, and to like compare them to what I see them, you know, when they're down the box, you know, trying to get deals done to when they come, you know, over to us, and they're really lovely people. Yeah.
Actually, just probably another way to visualize it. Like, if you went to say a trade house or major, they're not doing high frequency type deals. They are, you know, they're generically hedging something, or they're getting into a speculative position, but it takes time. So there's no need to be so panicky, right? They kind of know what they're doing, and they might get frustrated with the broker if something happens with a deal, or yada, yada, yada. But where it picks up is the open outcry situation, which is, you know, in the LME, and we are OTC trading and oil swaps. So there's plenty of that. But most trading is done on the screen now in wider markets. There's no one to have a go at, right? It's just like you're doing it yourself. But because of the way that the oil swaps market is set up, trading with brokers, and then in windows, like the North Sea window, everyone has like headphones these days, but I used to have like a speakerphone blaring of the trading floor, and every market participant is like logged in, whatever, like has rung in and is on mute or whatever. And you can hear the brokers basically taking orders from everyone, and you just shout out. So there's a screen you can reference, but a lot of the deals are done shouting. Yeah. So you literally have to scream and shout down to be heard. And you know, you would win a deal if someone might even be quicker than you, but you were louder. So quickest and loudest is the way to get the number first. And guess what? That's the market maker's job. Yeah. So I would argue the market makers probably are the loudest because they're in an OTC market, meaning they have to talk over the counter with brokers or in this pit type situation. Whereas the trade houses and majors have the same every so often in these windows and stuff, but it's not all the time.
Yeah.
You see what I mean? That's where the shouting comes from. If it still remains, that would be my argument. Talks a lot about shouting. But yeah, I mean, it's not just that the volume, right? It's like you're getting the point about how you're being held accountable.
Yeah.
It's kind of what you're saying, right?
Yeah, but I mean, there's being held accountable, and then there's just, being screamed at for the sake of being screamed at.
No,
and I was kind of prepared for that when I joined this company. Again, just from, seeing
So you were
it.
willing.
I was a willing participant.
Massively.
Yeah. I don't know how, I thought I was willing. I don't know how long I would have actually lasted had that been the case. But yeah, I mean, it's completely different here to, what I was expecting and this world in general. And I guess for anybody that doesn't really know how we're set up, we are kind of, the research arm is totally separate to the trading arm, or we liaise with the traders, for some of our reports and talk to them. But, our side of the floor is obviously a lot more chilled out, working with the sales team, working with the data team really closely. And everyone over that side's obviously a lot more calm. The juxtaposition between the two is really, really kind of crazy to walk into one and then walk back to the other.
But do you think, because the brokers are with you on this side, right? Split.
Brokers are with us, yeah.
And that energy can sometimes help as well, no?
Yeah, I mean, especially in the windows when it kind of, the end of the day, especially, I think, we kind of get into a bit of a lull. We've done all our reports and it's all a bit, tired. And next thing, all this energy coming down the box and the brokers have all this buzz about them and trying to get things done. And they have so much energy and being so close to them. It's kind of like, the day isn't done yet. There's still so much happening. And I guess the stuff that can happen in the window is really, really good.
No, that's what I've always loved about trading the markets. It's exactly that. You feel like it's giving you this stimulus and you almost don't have to do it yourself. You don't have to get yourself motivated.
Yeah.
Like running the business, moving away from trading and running the business, like a good solid 12-hour day now is probably twice the effort of a trading floor 12-hour day, because having someone screaming at you or like down the box and you got to fight for numbers, it stimulates like a game. And it's not a game, it's serious money and blah blah blah. But no, it's at the end of the day, it's competition, and it's like we love playing sport a lot of the times, being competitive and outside of work, but you get to bring it into work. So that's why I loved it, because you almost didn't really realize you were working.
What made you kind of move to the research thing in the first place then? If you really like the trading arm and you really like that buzz, why did you even set up research as a whole new team? Because I know, I mean, it's kind of blown up in the last year. I mean, since me and Vincent joined, the amount of reports that we do now and the way we analyze the market, it's intense. Like I'm even looking to add more stuff because there's just so much data that we have as a research house now and as a data team. But why did you think of, I actually need a separate in-house research team in the first place?
Yeah, I mean, I'd have to talk deeply about the company, like business plan and where it's going and all that kind of stuff. But I think I know what you're asking. And at the end of the day, it was my life. It was everything I'd been trained to be, right? And worked on and built. But I was always trying to build the desk when I first started Mandara, crude trading at Mandara, then built that team, then started Onyx with Omar, then built the crude desk again, then other desks dabbled with, then building the direct trading arm, and then it's just expansion, right? And it was so what are we doing here? We need to evolve this. There's a huge amount of growth in oil swaps. There's a huge amount of increase in market making activity, but the market hasn't really done anything with that, right? It hasn't made any adjustments. It's just fact that there's this growth and there's this opportunity. We're taking the opportunity in one hand, but on the other hand, we're not really doing much with it. Like we were treated like the bottom of the rung, but we were paying the most brokerage, fees. We were paying a hell of a lot of exchange fees. So we're obviously doing a lot, and we're trying to see where that. So what are we there? So we're not nothing because we're doing so much of the volume.
Yeah.
Liquidity models are huge in other areas, and it just kind of pieced together that we should be sitting on a hell of a lot of data that we're not using.
Yeah.
And that just led to the whole expansion. So so what can we do? Well, we're not experts in physical.
Yeah.
And we get enough reminders about that, but we are certainly experts in derivatives, and probably more so than anyone else, right? If anyone wants to test us on that, so this is what we do day in, day out, and our expertise has been 100% geared towards for so long. So the development of that means we have an expertise. It might be niche, but we can extrapolate that expertise into services. And then you'd be like, why even do that? Because it's about creating a real business. So trading businesses, me and Omar sitting down trading, we used to love it. I used to love the banter between me and him across the floor, getting people involved, be intense moments, down moments. It's just a great life.
Yeah.
But I think we both have the mentality of wanting to build things and wanting to not just do the same thing repetitively. And I think to some extent, to be a great trader, you need to be repetitive. We have a guy called Jasper, one of our partners here, and like he wasn't particularly talented at the beginning, and that's always a good sign. And so they want to do it, but you're not that talented, means you have to work really hard. And he just did the work, and he just did not stop, banging his head against the wall, taking the hits, taking the abuse, day in, day out.
Yeah.
We called him Jarhead because it's like he just loved it. And now he's just so militant. He's so dominant in his market. It's like really amazing to see. But embedded in his personality is repetition, doing the same thing again and again and again. So I remember a good friend of mine, James King, he actually did a bit of work with us at the beginning. And wrote that book, right? You've seen that book, Accelerating Excellence. I've got it here. Well, you should read it. Yes. But he was a performance director at Mandara. He's done bits and pieces with us as well. And he always used to say, like, there's two types of people. There's the repeaters and the creators. And you have to have both.
Yeah.
And you can't have one. So it's full of repeaters. You don't really build anything new. Full of creators, no one gets anything done. So it's like a kind of, where do you sit in that? And I just been repeating again and again and again. And even though there was development, it just very samey when you start the year again, like from zero. And I realized at one point as well, like if I make $1 billion, people might be like, whoa, you made $1 billion. Then if I lose 500 million next year, it's like no one ever really cared that you made money in the first place. And actually no one really cares that you lost money the next year. It's just a quick story and might be kind of interesting, but that's it. That's you're living and dying for like that kind of validation. That's going to run out. I mean, you could be doing this just purely for money, but that's just not that exciting of a life for me either. So I don't know, it's going down like a bit of a philosophical route, but it's just like, I just wanted to continue to create. So that's how we ended up evolving. And I wanted to create a business that had real value beyond just the trading and beyond just like me and Omar sitting at a desk and then hiring some juniors who did the same thing. It was like, no, what are we collectively trying to achieve here?
Yeah.
And it was basically capitalizing on this huge growth in oil swaps and carving ourselves a niche and what that meant. Like the market does not want to appreciate the growth in the financial markets. It's all about the physical. They love talking about the physical. And there's only really recently, as you guys have been a part of, realized this switch in mentality, which is like, shit, the financial markets are hugely dominant compared to the physical flows, and they're actually driving things. So that acknowledgement is great because we've been working towards that for so long in terms of like identifying that niche, providing the data to the market. And you're going to say, but then still, why not just trade off it instead of being a service? Why be a service provider when you could just trade off it? And again, it's just maths. Like at the end of the day, being a trading company, being a cash cow, it's not valued that highly. If you ever wanted to IPO, let's say, for example, what value do you put on a business that just trades? There's companies like Glencore that do it, but remember they've got physical assets, and the companies that really like IPO and are proper businesses on the exchange, they have a business model that has like proper business drivers.
Not just the trading.
Not just like, not even just the trading, just the people. Like literally me and Omar. So that's not a business. So you have to establish, what are you doing here? Like, okay, we're providing liquidity for the markets. Let's get that identity really clear. And then we're doing that with as much as we can in as much market share as we can. And then we're extracting the data we're seeing from the market. We're turning that into services. Why? Because that's our job. Everything we do is providing liquidity and the detail around it, the research around it, our expertise around it. Because as this growth continues, we're there to provide all the service for that. You see what I mean?
Yeah, I think as well, joining with no background in it, the way we did things here made so much sense. It's almost like mathematical, like having all this data and being able to see it all essentially in real time and being like, well, because obviously I was trained to be like, this is how you're going to analyze the market using Onyx data. It just makes so much sense to do it that way. And then
I appreciate you saying that, because at the beginning no one had a clue, right? Everyone was like, what are you doing? And why wouldn't you do this? Why wouldn't you do that? And I guess that's kind of what it's all about, right? You try and see what's going to happen next in the market. And I think I could see that the way people were treating this, I think people thought market makers would die out because it was like, it's an inefficiency thing you're playing on, and the inefficiencies will become efficient and there'll be no need for you. But the opposite's happened. Like the whole market's been allowed to grow. There's been more and more inefficiency as markets grow and things need to be linked up. So that model has continued to boom and it will continue as the financialization grows. And as I said before, like it seems like it's gotten so big, the financial markets are actually driving things. So it's actually the other traders that have needed to change their models, not us, which is pretty interesting. I wouldn't have known that, but I certainly could see where this was going. It was an evolution. It wasn't just going to revert back to normal. So that's, that's kind of it in a nutshell.
I mean, it's an evolution. It's I think to be fair, people have generally realized about the fact that financial flows are really driving driving the markets, but in commodities it's a little bit different because, of course, ultimately it's based on what's happening on the physical, what's the physically traded commodities. It's not just oil, you've got natural gas, you've got agriculture, you've got metals as well. It's really based on the physical supply and demand, and that's how analysts have been predicting their prices, have been forecasting, strategizing based on what they think will happen with the supply and demand in the future. But at the same time, they do understand that yes, the futures exchange have developed, they have grown by so much over time. But what about the financial flows? How do we actually objectively quantify the sort of data? And I think that was really interesting to me when I first started as well, because of course I've seen the news before. I've seen a bit about Brent futures, a little bit about the WTI, the oil prices, but I wasn't very aware of the crack spreads, anything. The Brent futures, that's just the tip of the iceberg. That's what most people know, but there's such a massive world beyond that. And I think it's just very interesting because it's such a niche market, but there was just so much untapped potential, which I think it's, of course, Onyx providing liquidity as a service, but also showcasing this to everyone else that this is interesting stuff. You haven't seen this before. But I think when we show people these new things, initially there's always it's normal, it's psychological, like as a resistance, as an instinct, because it's something they haven't seen before. It's quite foreign, but then it takes a while to get used to it. So yes, they're aware of this financial flows, but this whole switch won't happen overnight, but it might happen gradually, as we're seeing over the past few months, over the past few weeks. Yes, people are saying yes, financial flows are driving the market. Why are they saying that? Because their supply and demand forecasts have shown that there'll be extra growth towards the end of the year. But why are oil prices coming down right now? It doesn't make sense. So because of these catalysts, these events that happen that go against what they think, they say, maybe there's something else there. Maybe we can give a little bit more credit to these financial flows. Let's actually go into a deep dive about what that is all about. And essentially, at least for me as well, of course, you do see there's a democratization of information. Supply and demand forecasts are everywhere. There's a proliferation of research agencies that do this sort of stuff. Of course, you've got satellite tracking as well. So literally, you've also got ship tracking. But what about the financial flows, looking at the microstructure? That's something that's still very new. And Onyx is essentially, I would say, ahead of the game in that sense. So yeah, we've got unique stuff that
you've noticed since you guys, from when you started to now, the difference.
Yeah, I mean, we're constantly looking to build, even because there's just so.
But I'm saying in market mentality.
Yeah, definitely. I think we're being listened to a lot more, and people.
But this theme is being listened to a lot more, you think?
Yeah, generally. I mean, you see it in the bigger players on YouTube coming out and on the news and stuff. When people aren't necessarily listening to the market as broken thing anymore, people are trying to look for what's actually happening. There must be an answer somewhere. It couldn't just be broken.
Yeah, that point though is in I just don't. I completely agree with you, but is in the logic. But it's I swear that logic's been around for a while. Maybe 2022 was just so volatile and so against consensus in the end. Ultimately, the Brent price going down when the market was so tight. That was so frustrating for people trying to, believe in this bullish market. That I guess it was okay, fine. We've just got to admit that something else is going on. But I don't know. It just feels like that's happened so many times. Why now?
Yeah,
just evolution maybe
maybe people just got burned enough times. Do you remember when we first joined? I think me and Vincent's maybe first or second week, we didn't get shouted at, but you definitely were guys, think about this. And me and Vince, you were trying to make us think about where our Brent price is going to be by the end of last year. I think me and Vincent both came along with loads of just news articles and fundamental drivers, and we were that just doesn't make sense with the positioning of the market.
It's not that it doesn't make sense. It's like, it's a way of, you were buying into the way oil was being written about online, right? Which is like, oil markets move up and down because of supply and demand.
Yeah.
Therefore, how do you create these narratives around retrospectively what's happened?
Yeah.
And if that makes sense, as in, so because you're reading those justifications, so okay, therefore that's the way the markets are being driven. And I was, just trying to make that link. It's like, fine, you can have that causal link, but someone's got to go and react to that for it to feed into the market.
Yeah.
So at the end of the day, it's still about the buyers and sellers of the market. End of story. So you can say it's because of supply and demand, because they reacted to supply and demand information, but it's still about their reaction. If someone wants to act like an idiot in the market, they can do that, and they can have a huge impact on markets. You just got to accept that.
Yeah.
So if you feed that into your logic, that's the only thing we're really changing, adding that step.
Yeah, so actually being able to see, well, where are people actually putting their money? And I mean, we've seen it loads of times with headlines. I mean, we have so many case studies done where big headlines have come out and we've actually seen the opposite in positioning.
Yeah.
I mean, we've seen it in all the different markets when we're thinking, oh, well, this should come off because of X, and actually the market's not positioned that way. That's not like.
But it's amazing for me because like you guys just came in. You only been here a year, which is nuts. It's nuts because you're like experts in this area, because like obviously it's so new and we've got the data and I guess you've been trained as well, but you got credit to yourselves as well, the way how hard you guys have worked. But that is weird, right? You've like literally joined and then you've had this nuts year in 2022 to analyze and to watch, and then applying that to this new way of looking at markets. And then amazingly in the last couple months, or month in particular, we've seen the signs that the market's starting to accept this way of thinking in terms of financial markets being really dominant. It's people, you think, it's like you're spending a lot of time with clients and you think they've changed their kind of viewpoint. And then, OPEC it didn't get much, it's on LinkedIn, but, doing a conference linked with the IEA and IEF, trying to get a handle on what's going on with these financial markets. How are they driving markets? How are they driving volatility? Like there was definitely an acceptance in that conference. It's big names there. Like what is going on here, and therefore kind of what next? It's a new thing to dive into. Yeah. So it's a really, like, you guys have nailed the timing. So well done with that.
Yeah, definitely. We definitely got lucky coming in when we did. But I guess we didn't have anything to let go of. Like we weren't,
Yeah, no, definitely. And you're going to see that like as you hire people, right? Are you going to want people who are like talented analysts? Yeah. But if they've got their glass, the saying
they already
goes, they're already not molded. They're already molded to something else.
Yeah.
You can't mold them.
It's hard to break them down a little bit and be like, well, yes, like that supply and demand obviously matters, but it matters because, like you said, because people react to that.
Yeah, and we're exploring the answers as well, right? Okay, so if it's not just about that, it's also about financial. How do you analyze the financial? We're also on that journey, right? We have great data for it, but at the same time, we still need to figure out as we go and evolve our models. Yes. To see how there's predictive power in the behavior, predictive power in prices even. Yeah. And that's the holy grail. That's the one thing I would say has been frustrating for me, because even before you guys got here, trying to explain this to people, and they say, okay, cool, this sounds quite cool. So show me the data and tell me when I should buy and when I should sell. I'm like, what that is a trading system, and I would never sell that. Like at the end of the day, but it's like the holy grail, right? It's about giving you an edge. And I was speaking to someone at the SOPEC event, like over lunch, about algorithmic trading or CTA type trading. Is that it's about that 5% edge, and you're losing a lot of the time. But obviously the model is you do it so many times and you balance the risk reward and your great risk management that you generate. It's a business. Yeah. Whereas people will say, okay, so when should I buy and when should I sell? It's like, it's just like, it's only going to work that way if you do it consistently over time. You need to apply the risk management models and all. It's a different thing. That's not what you should be looking to do. You should be looking to, it's a data point. It's a way, like maybe there are models that are systematically responding to supply and demand, but they definitely don't work. So like, I guess what I'm saying is the market's on this evolution now. How does OPEC look at it as well? So I say, you've got to model behavior now. You've got to use this financial data. Okay, how? There's the CFTC report, which is like complete staple. Yeah. But it's got to move beyond that. We've heard talk about paper balances, right? Like the supply and demand balance is this, the paper balance is this. Yeah. I don't know. Like it's an interesting way of visualizing it, I guess, but I don't really know what it means. the balance of people in different subcategories, sure, but I don't really. Anyway, we'll have to see how that plays out. But that's why I think it's an interesting time for you guys, because you're on this like exploratory journey with the market and trying to stay ahead of it, right? Because we're the ones trying to pioneer this. Yes. So that's a great thing to be involved in.
Especially from like because we're not entering as traders, but more as market analysts. We actually have this we view it from a great vantage point, almost as if I describe to people as, you know, the traders, they are the performers, they are the athletes, you know, battling day in, day out. But I would say we're sort of like the coaches, the analysts, you know, looking from afar, having a macro view about what's actually happening. And this still includes the financial flows. And I think what really
that's a really good point.
Yeah.
Guys, quickly say, because they're a football analogy, basically.
Yes.
Like someone on the field, like sprinting around, doing a great job, even if it's Messi. At the end of the day, like, you're not going to ask him about like, how do we win the league though?
Yeah.
He's just going to go out and be the best he can be.
Yeah.
And that is actually a really good way of analogizing it.
Yeah, we're sort of, as the coaches, they're not going to give them a crystal ball telling them exactly what they need to do to win, right? But they come up with strategies, tactics to give the players an edge.
So you're doing that for the market.
Exactly.
Vincent Lasso.
Vincent Alex Ferguson.
Okay. Very interesting. But I think like there's plenty to talk on other times. It's a great open topic. And there was behavioral stuff as well you were touching on, which we could definitely do next time as well.
Yeah, no, I mean, it was just a little bit of reflection on my part on the weekend, just thinking how different my role is and how it has like evolved so much in a year. I mean,
well, Miles says, you know, Miles is always like our head of commercial here. If you're not learning, what's the other thing he said? Basically, if you're not learning, leave.
He says it a lot more cutthroat than that.
Okay, yeah. That is true, right? You should be.
Yeah, I mean, we don't want people like that here on this side, I guess.
No, but for yourself, you wanna be in a position where you're always evolving, no?
Yeah, definitely. But I think I've said this definitely to people joining as well. I mean, because the market's so different every day, I think even if you try to do the same thing every day, there's always something else going on anyway. So, I mean, because in the beginning, obviously, me and Vincent were just like doing the reports. We weren't obviously involved in much of the building just yet, you know, when we're learning. So you are doing the repetitive tasks, but they're not really repetitive when there's stuff happening all the time anyway. And you're looking at, you know, I think it was recently. Remember when we saw the producer merchant in the CFTC and they both, I know they both, was it cut or added? What did they do that week?
A producer merchant. So
do you remember that week? And I was like, what's going on here? I was like, I haven't seen this, at least not recently. And it didn't make sense that they would both be, I can't remember, was it adding or taking away from their position that they both did? And it didn't make sense they would both be doing it. And just coming and being like, well, I've not seen this before. What's happening here? I think Esan then went to you and was like, what do you think is happening here? And then we went and looked at all like the different flows and
and that creates the story, right?
Yeah, what was actually happening. Yeah.
That's what it's all about.
Yeah.
And that's much more evidence backed. And you can then start to link it to everything else. So I'm really glad you see it that way.
So like, even if you're looking at the CFTC every week, I mean, it changes every week and what's going on and where is the money coming from, who's actually selling, where's the liquidity coming from, who's de-risking. I mean, if you can do that every week, but every week it's something different.
Yeah.
I mean, it's a bit more tired right now at the moment. I think everyone is just waiting, like we said earlier, for a new narrative to come along. But you can do the same thing every day here, but it's still a bit different in this job, which is lucky.
Repeating and creating. I think that's the ultimate. Try and do both, right?
Yeah, exactly.
Balance, yeah. No 2 days are the same.
Yeah, definitely. And I mean, yeah,
one day Vincent says he's going to come in the office. The next day he doesn't. That's some crap excuse about China. Okay, cool. Well, we'll leave it there. Yeah. So we'll leave it there. Thanks, Audrey and Vincent, for your time. And thanks, listeners out there. Tune in for the next episode, which I think will be the week after next, to be determined. But thank you for the loyal listeners out there. We're starting to get a bit of a following and we appreciate some of the comments coming back and feedback. So keep it going and see you next time.